Roundtable, sponsored by Global X ETFs.
Welcome to Barron's Roundtable, where we get behind the headlines and prepare you for the week ahead. I'm Jack Otter. Coming up, investors eyeing the 2024 presidential race, PIMCO head of U.S. public policy Libby Cantrell on what the election could mean for the markets. And later, huge energy demand is driving American companies to a once shunned alternative, how investors can play the nuclear energy comeback. But we begin with our expert panel and three things investors ought to be thinking about right now. On the Barron's Roundtable, my colleagues Ben Levison, Teresa Rivas, and Jacob Sonnenschein. So, Ben, it was one of those weeks on Wall Street where nothing worked.
Nothing at all. I mean, and for good reason. We had two big events this week that investors were looking to. One was earnings from Broadcom, a big chip company. It was going to tell us if the AI trade was still doing its thing. And the other was payrolls, and that was going to tell us if the economy was strong or weak, or we were heading to a recession. And both of them disappointed. First, it was Broadcom, and it just meh. And it sent this warning that, you know what, tech isn't the place to be anymore. And then the payrolls number came out, and at first it looked like it would be enough that, you know, people who were selling their tech stocks would buy other things. But then I think they stepped back and said, you know what, this number isn't good enough to tell us there's no recession. It's not bad enough to tell us that there is a recession. But we're just going to step back right now. And you had a stock market that really had a terrible week. S&P down 4.2%. Its worst week since March of 2023.
Wow. So September, traditionally not a great month for stocks. And heading into an election, there's always uncertainty. Should we fasten our seatbelts for a bumpy ride?
I think so. Ned Davis Research put out a chart that shows that during an election year, September and October, September is usually a tough month. Well, September and October are usually more volatile than other years. And with the election as close as it is and policies so uncertain, I think we have to expect that there's going to be some bumpy road between now and November.
All right. We get a couple of inflation readings next week. Do you think that'll change anything?
Probably not. I mean, we're going to get numbers that show, you know, the headlines are supposed to come in around 2.6%. You know, it's a good number, but at this point, I think people are past inflation. They're worrying about the economy. And, you know, people are talking about now, is it going to be 25, a quarter point rate cut from the Fed? Is it going to be a half point cut? I don't think it matters. I think it all comes down to this data and whether or not the economy can keep growing.
All righty. Thank you, Ben. So Ben referred to a tough week in tech land, Teresa. I mean, just really ugly for NVIDIA, Broadcom, all these stocks. Is the AI trade on its way out?
Well, maybe, maybe not. As Ben so eloquently said, Broadcom's earnings were meh. And the earnings were actually fine, but the forecast was not so great. And of course, on Wall Street, the question is always, what have you done for me lately? So worries about revenue in the current quarter are what really sank the stock. Now, it's important to note that analysts are still optimistic. They think this is just a hiccup. But after NVIDIA, the market was really looking to be reassured, and it didn't get that.
So possible reassurance maybe on Monday. Apple will unveil its latest iPhone, the 16, for those keeping count. And the idea here is Apple Intelligence, its version of AI. Will that be enough to get the AI trade back again?
Maybe. So Apple has been fairly mum about their AI. We have very few details on it. So there is the chance that if they really come out with something that gets people fired up, it could move the stock. And if they integrate it with the phone, with something like Siri, it's a win-win for them. It progresses their AI program, and it's a good reason for you to go out and buy a new phone.
Siri definitely needs some serious help. Thank you. Jacob, give us some good news. This has been very glum so far. Prices at the pump are looking a little bit better for drivers these days.
Yeah, oil's down 19% from its 2024 peak, down below $70, which is first time it's gotten below $70 this year. You even have natural gas getting hit. You have a decelerating U.S. economy. You have an even worse China economy. China's a big oil buyer, so these things are just putting a lot of pressure on oil.
And so gasoline at the pump, it's now, I guess, is below $3 in 10 states, and there's some prediction that that might increase.
There's a forecast from our colleague at OPIS, that says that the national average for gas could get below $3, not in 6 months, not in 12 months, but in Q4.
Wow. Of course, you got to say, Hurricanes could disrupt offshore rigs. Problems in the Middle East could do who knows what. So these predictions we should always make with a grain of salt.
Yes.
And this could have political implications. I mean, the Harris campaign would love to see gas prices below $3 heading into the election, given all the heat that Biden has taken over inflation.
It's possible that Harris and company are looking at gas prices every day.
They probably are. Thanks, Jacob. Wall Street's watching the Trump-Harris showdown heading into November. PIMCO's Libby Cantrell on what the election outcome could mean for investors next. The presidential race is a dead heat as Vice President Kamala Harris and former President Donald Trump hit the campaign trail hard, pushing their economic agendas ahead of the first debate. Whose policy would be better for the stock market? How should investors position themselves? PIMCO's head of U.S. public policy, Libby Cantrell, is here to weigh in. Libby, you have one of the coolest jobs in finance, no question about it. But this summer, you probably didn't get to go to the beach as often as you might have liked.
Sadly, no.
Crazy summer.
Yes, spending a lot of time with our clients,
Yeah,
which is
I'm sure.
wonderful. But yeah.
So we're all watching the same polls, the same horse race, but you have some nuance. What do you see as the most likely outcome right now?
Yes, well, this really, as you just said, this race to the top of the ticket really is a toss-up, if you will. In many ways, despite all of the drama over the last 2 months, we really are where we were when Biden was still on the top of the ticket back in the spring. Really a 50-50 race. Each candidate, Harris and former President Trump, both have their advantages. They both have their disadvantages. So really a 50-50 race. We will say, though, because it is so close and it will likely be decided at the margin, Pennsylvania being the most important state, that any sort of marginal event will really matter. So you're right to flag that debate next Tuesday. That will be incredibly important. Also, lastly, something really important from an investor perspective is the composition of Congress. The House right now, Republican-controlled. The Senate right now, democratically controlled, albeit very narrow. We think that the Senate probably will flip from narrowly Democratic-controlled to narrowly Republican-controlled. The House really a toss-up.
Manchin and Tester, you think, are the most vulnerable?
Senator Manchin in West Virginia, that seat is lost for Democrats. That means the best night that they can have is a 50-50 night. And then Senator Tester in Montana, a state that President Trump won by more than 15 points, likely going to be lost as well for the Democrats. So most likely, regardless of what happens at the top of the ticket, our base case is probably a divided Congress or a very narrowly unified Congress. But I think the margins are going to matter here in terms of policy.
So let's talk about policy. One of the cool things about your research is you don't talk about what the candidates are saying, but what could actually happen, which is important if you want to make decisions. On taxes, you pointed out a nuance with the SALT deduction in terms of who will make the difference in Congress. Can you explain that?
Yeah, so I think just as a reminder that next year is a really important year as it relates to tax, because that is when all the individual Trump tax cuts are expiring at the end of 2025. So regardless of who wins, tax is going to consume the narrative in Washington. And we do think you're going to see some changes to the SALT deduction, regardless of who wins. And that is for the very reason that you allude to here, is that if Republicans keep the House, it means that they will have done well in the suburbs of New York and California. They will have kept those seats. If Democrats take back the House, it means that they will have won those seats. And in those particular districts in New York and California, the SALT deduction is incredibly important. So for those frontline members, if you will, doing something on SALT. So we think there will be a change right now. If you might remember, there's a SALT deduction up to $10,000. We think that is definitely going up. We might even see the SALT deduction reinstated. That is very expensive, but that will definitely be on the table next year.
Tariffs. There's a lot of jawboning. What could actually happen and what could it mean?
Yeah, so tariffs, unlike tax or spending, which has to go through Congress, the president has a lot of executive authority around tariffs, can implement tariffs basically unilaterally without the Congress. We do think that, regardless of who wins, tariffs are likely going up, but there are going to be degrees of differences. Former President Trump, of course, has talked about 60% tariffs on China, 10% tariffs on the rest of the world. Will he really do that? I'm not sure. But we do think the direction of travel here is that tariffs will be going up. We know that President Trump really wants to reduce the goods trade deficit, that trading relationship between the U.S. and other countries, and tariffs is one way to do that. I will just say the upside of this is that it could reduce the deficit. Tariffs do earn a lot of revenue, but they also could hurt growth and also affect inflation. inflation, depending on sort of how severe they are.
PIMCO, known as a bond shop. So what's happening in Washington? How do your researchers, your analysts predict that affecting the bond market?
Yes, I think the first thing we're telling our clients is stay invested, because the market, usually the S&P market, like the S&P index has done well regardless of who's been elected, regardless of the composition of Congress. So stay invested. If you're in cash out of cash, get into the market, whether it's the equity market. We think there's a lot of opportunity in the fixed income market right now. As you allude to, we are bond managers. In terms of the bond market, we do think that regardless of who wins, deficits are going to continue to increase. Whether it's because either candidate doesn't pay for the extension of the Trump tax cuts, whether it's because there's more spending, but importantly, Jack, because neither candidate's going to reform Medicare or Social Security. Those are really expensive programs, super important, but very expensive. So the upshot here that is that deficits are going up. That has implications, particularly for the long end of the yield curve. And we think that yields are likely probably going to go up at the long end of the yield curve because of that sort of fiscal outlook.
Which is a contrarian view. Thanks, Libby.
Yeah, thanks.
Appreciate it. Always great to have you in. Thanks for coming by the studio. America's thirst for power has led to a new embrace of nuclear energy. Which companies are seeing a spark from the switch? Next. The boom in artificial intelligence and electric vehicles causing a surge in demand for electricity in the U.S. And to keep the juice flowing, Americans are getting over an old fear: nuclear energy. It's the Barron's cover story this week as we're looking at what investors need to watch in this nuclear comeback. So, Ben, Americans of a certain age can remember 3 Mile Island, the Chernobyl disaster, more recently Fukushima in Japan. But somehow we're getting over that.
We are. I mean, part of this is just power demand is up. And we have AI coming in a big way, and that means that we need lots of data centers. We need to be able to cool those data centers. You need a lot of power for that. We have electric vehicles. We have just about everything is switching over to electricity from things like oil and gas. And that makes sense. I have, my wife came from a tiny village in Central Europe, and over the winter they had to put coal into their furnace. And I don't know if any of you have been in a village where everybody's burning coal, but it has a nice, interesting smell to it, and it's a little tough on the lungs, so coal isn't the greatest thing. It's just inefficient. We have oil and gas, and that's okay, but we're also trying to put in solar and wind, but there are problems there too, and so you add nuclear to the mix, and you're starting to help solve this problem. And so we're bringing back 3 Mile Island, the one reactor there that still is workable. That's coming back, and they're even keeping online nuclear reactors that were supposed to go off. So it's just becoming a big way to help plug that power gap.
And it seems to be bipartisan. Republicans are more in favor of nuclear energy than Democrats, but the Biden administration has a goal to triple nuclear usage by 2050.
Yeah, I mean, it's 60% of Americans now are in favor of nuclear power, and that makes sense. I mean, I think everyone kind of realizes that we do need other sources of energy and that nuclear can help fill that gap. The other part of it is that there's a generational divide. Part of it is that there are people who didn't grow up with Chernobyl or with 3 Mile Island, or in my case, I remember watching Silkwood. There are people that now, the younger folks are thinking more about climate change and ways to solve it, and they're less afraid of that. And then you also have the government is behind it in a big way, where even, companies are getting funding either through credits or direct payments to help build reactors. So it's just a very different world for nuclear than it was even 20, 30, 40 years ago.
Summer of 24 was the hottest summer on record, breaking the record set in 2023. So clearly global warming is part of this. Jacob, very good news for companies who are in the nuclear field. Not so good a few years ago, but now suddenly their fortunes are looking up.
Yeah, so two that our colleague obviously also mentioned in his story was Vistra Corp, which is probably going to do, these companies are growing mildly revenue every year. Vistra is probably going to get to a little over $18 billion in a couple of years in sales. And they've gotten through a lot of recent investments. So their margins, if that revenue comes in, are going to go up a little bit. They're going to grow earnings by double digits. They're paying dividends. They're growing dividends. Very similar story for a slightly larger Constellation Energy. What I really like about both these companies, they have the stability from a revenue standpoint of a utility company, but they're not regulated, and they're trading at below market price earnings multiples.
Well, and you also need uranium for these power plants, and so you have Camco. They're a Saskatoon-based uranium miner, and they've actually been reopening mines that were closed following the Fukushima disaster. Its CEO said they actually are experiencing the best supply-demand environment in his 40 years in the business, and analysts think that earnings are going to continue to grow.
Plus, it's not very often we get to talk about Saskatoon, so there's a benefit there. Teresa, it obviously takes an enormous amount of energy, as Ben mentioned, to run these AI centers. Some very big names are getting behind nuclear in order to solve that problem.
Absolutely. So we see Microsoft and Amazon really invested in this because they need to power their AI projects. So, and it's not just the companies, but also you see Bill Gates and OpenAI CEO Sam Altman. They're interested in this as well. Bill Gates has a nuclear company called TerraPower, and it's using $2 billion of government money to repurpose a former coal plant in Wyoming to become a nuclear reactor.
Alrighty, it's not just nuclear, of course. As Ben said, we need all sources. Natural gas is the cleanest of the fossil fuels. Jacob, you looked at a couple of companies that are in that field.
Yeah, EQT Energy and Chesapeake Energy are both. EQT is a little bit closer to a pure play on natural gas, but they both basically are. And if natural gas sees higher demand going forward because of this, these are two companies that are going to benefit.
And if we get more pipelines, then they'd be able to send that natural gas to more places. Back to renewables, Ben. So in my travels this summer, I went to a couple of places, Rhode Island, Massachusetts, and I saw windmills where they weren't there last summer. So clearly there's a push in that direction, but I guess it's just not enough.
It's not enough. And there are other issues like intermittency. I had to look this up, but it's the problem. It's like the wind isn't always there. If you have a windmill, you need the wind to be blowing, otherwise there's no electricity. Solar power. We have night. Night is an issue. We could try to ban night, but I don't think that's going to work.
Yeah.
And so you don't get this consistent power generation. And so you need power. You need power banks, batteries to store it, and things like that. But we just need lots of different sources of energy, and nuclear is going to help fill that gap and just be one of those sources. And I think in a world where you're not going to be using a lot of fossil fuels, but you will have solar, you will have wind, and you're going to have lots of nuclear reactors.
And batteries just aren't there yet to hold on to that sunshine all night long.
Not really. I mean, I can charge my phone with these little portable batteries.
Even your car.
Even my car, right. And I can use my car to power my house, but we just aren't quite there with the battery packs yet. Though, that's actually it's a total tangent, but that's actually the part of the bull case for Tesla, which we won't talk about right now.
But you're absolutely right. Alrighty, thanks, guys. Ben and Jacob have a pair of investment ideas, and Teresa tells us why pizza at the pump could be your next big play. Stay right there. So, Teresa, when I pull into a gas station, it's because I want to fill up the car with gas, but apparently I am missing out on something.
That's right. So we here in New York, we all know that the best pizza is from a gas station in Iowa, obviously. But don't scoff at it, because earnings from Casey's General Stores show that that's true. They reported another great quarter earlier this week. The stock has done fantastic, and they're actually the 5th largest pizza provider in the United States.
I would not have made that call. It's so serious now that there's actually a talent war for these garage gourmets. Tell us about that.
That's true. So Casey's is famous for its pizza, but Wawa, which is a Philadelphia area-based convenience store, has actually hired away one of their chief chefs when it was creating its own pizza offering. So I think that really shows how important freshly prepared food has become for the industry. And it's not hard to see why. If you're coming home at the end of the day, you want to get your gas, it's really easy to just pick up a pizza for your family for dinner, and it's a great option in terms of convenience and value.
And that business is booming.
That's true.
We looked it up on LinkedIn. Corporate Executive Chef was the title for that guy who was poached by Wawa. All right, let's go to actionable ideas. Ben, I would say this is a contrarian pick.
Well, I actually don't think it's contrarian. I'm looking at General Motors, and you would think General Motors is kind of contrarian, but you know what? It's had actually a very good year. And so with the sell-off this week, I went around, I looked for strong stocks that have pulled back to, levels that looked like they were buyable. And you look at General Motors, it fell a little bit over 5% this week, but it's still above its 50-day moving average. And you look at what's been going on there, it's in great shape. It's been cutting back on its spending on EVs. It's buying back stock. It's paying a dividend. It's been cutting down on expenses. And it's still up 16% over the past month, despite this pullback. So I think it's one that looks just very strong, and it trades at only 4.8 times earnings, which is ridiculously cheap.
Absolutely. All right. Thanks for that. What do you have for us, Jacob?
Advanced Micro Devices is the Robin to NVIDIA's Batman. Okay. NVIDIA is doing over $100 billion in data center sales. Some of that is artificial intelligence. AMD, just a matter of months ago, was doing zero. It's now talking about publicly doing more than $4 billion in AI chip sales. This is a company not even doing $30 billion in total sales. So the profitability from these chips are going to do wonders for earnings growth. And AMD, the stock keeps getting knocked down. It's trading at a similar valuation to NVIDIA.
This is a dip to buy, a chip to buy?
Both.
Alrighty. Thanks very much, guys. To read more, check out this week's edition at barrons.com. And don't forget to follow us on X, that's at Barrons Online, and on Facebook and Instagram for the latest Barrons stories. That is all for us. We'll see you next week on Barrons Roundtable.